Right now, looking at it open, slightly open, and most of the indices except the NASDAQ. The stocks to watch this week are financial sector because we're looking at about a 3% increase in the bank's performance over last year at this time. So we're in anticipation of the reports for the end of last quarter. So that's why we're up a little bit today.
Okay.
All right. Okay. So the three economic issues. Number one, the debt ceiling.
Exactly, the debt ceiling. That is going to come to head sometime next month. What we're looking at there is we reached our ceiling already. Now they're robbing Peter to pay Paul, paying some bills and putting some off, kicking the can down the road and some of the other bills. And my gosh, we're going to have to raise that debt limit. That's all there is to it.
I think I've heard this song before.
You have, and you can hear it again.
It's crazy.
It is, it is. We've already decided to spend that money, but now we don't have enough money to pay for it all because that's what they decided in terms of tax revenues and what we're expending, or expenditures, but they won't raise the debt ceiling. They're fighting about that. It's silly, it's crazy. And it has impact on us as a country because the full faith and credit of the United States government may be taken into consideration here.
Another downgrade.
Yes.
All right, so there are 4 outcomes that you think could happen because of this. Number one, an agree to increase.
Right, that's
ceiling.
that's the best outcome. Number two, they won't come to an agreement and there'll be a partial shutdown of the government. Number 3 was the platinum coin, but like you reported this morning, that was taken off the table as of last Saturday afternoon by the Treasury Department. So you won't have the platinum coin resolution. And basically the other one is we could actually issue some IOUs to pay our bills. Which would be like, California had to do that about 3 years ago, or 4 years ago now. They didn't have money to pay the tax refunds to individuals, so they sent them a bond, which was an IOU.
Interesting. Okay, so real quick, let's touch upon numbers 2 and 3, and then we'll talk more about them next hour. Number 2.
Sequestration. Those are some automatic cuts that were actually, they kicked down the road from January 1st, and they have to be decided by March 1st. And the third one, the third one is the continuing resolution budget. How we're going to spend our money. We haven't come up with a budget for the last 4 years, and we better do something about this now.
Okay, so our subject today are 3 major economic things that need to be touched upon by March 27th.
Exactly.
All right, first of all, the debt ceiling, of course.
Yeah, that's the first one that's coming up sometime in February. It's really hard to determine what date that's going to be, largely because we're robbing Peter to pay Paul right now. We've already reached the ceiling. Now we're just shifting some debts around and trying to make our cash last as long as we can.
And we talked about this morning in the headlines that the $1 trillion coin is off the table.
Off the table as the last Saturday, that is correct. So basically, this is pushing the president and Congress to come to some type of resolution.
Well, that was really a gimmick, wasn't it?
It was. It was a counting gimmick is exactly what it was. It would have worked. A lot of people said it would have worked, but still, that's not the way to run a railroad.
We don't get to use gimmicks in our own household.
No, we do not.
Our government shouldn't either.
Exactly.
So what are some of the other outcomes that could happen with the debt ceiling?
Well, the government could shut down, and because we don't have enough money to run the government anymore, and we could just pay our essential debts, like for interest on bonds and things of that nature, and that could create a lot of havoc, as well as it would call into question our financial stability as a nation. Our debt rating will go down, and a lot of nasty things could happen thereafter.
In your opinion, how likely would a complete government shutdown be?
Oh, probably 50-50 at this point. They've done it in the past.
Okay.
And there's a lot of talk about let's do it again to win our political points.
Okay, what are the other 2 economic issues we want to touch upon?
Sequestration. This was supposed to have been decided on December 31st. It got kicked down the road to March 1st. And basically those are the massive spending cuts, the automatic spending cuts in defense and on discretionary spending that were supposed to kick in but didn't. So they still need to decide how they want to handle that. If it expires and they let those cuts kick in, we're looking at a slowdown on the economy, probably a recession by the latter part of this year.
All right, and number 3, continuing resolution.
Right, that refers to our budget. We haven't had a budget in 4 years, and that too was kicked down the road a ways, and so I'm working on a continuing resolution. So we need to come up with a budget, and the current continuing resolution, which is a substitute for the budget, expires on March 27th.
Okay, and so let's talk real quick about this chart that you've prepared for us, and some really staggering numbers here. Exactly.
This is how we spend our money. And in terms of the appropriations for defense as well as discretionary spending to the tune of over $1 trillion, just on the defense and discretionary spending. And I point out defense, $519 billion for defense. We spend more on defense than the next 17 countries altogether.
Combined.
Combined.
Right.
Exactly. And then also the number two is China in terms of what they spend for defense, and we spend 4 times what they spend. So,
and that does not even include, David was telling me this in commercial, that does not even include overseas operations like what's going on in Afghanistan.
And
right
in
now.
Iraq, exactly. That's an off budget item. It's the
It's
99
not even
billion down
figured
here.
in to the actual.
No, it's below the line there.
Wow.
It's a footnote.
Okay, and also
big
you
footnote.
can see a lot of money, of course, goes to labor and education, military construction. So obviously, again, a lot of our budget is going to defense for our country.
Exactly. If we could cut 120 billion out of this, and just one time, just find 120 billion, we could stabilize our debt over the next 10 years. Because right now the trajectory is going up and out of sight.
Yeah.
But if we cut 120 billion every year, plus the 20 billion we'll be saving in interest, that's 140 billion altogether, that would stabilize it in 10 years. The 1.4 trillion they're talking about.
How's your confidence in that?
Not very good.
Oh, goodness. Well, on that note, David, if people want to get in touch with you, how can they reach you?
At glcu.com.